What's up, guys? I hope you're all doing well, and I hope you had wonderful holidays. And yeah, first of all, Happy New Year to everyone watching. And I hope you will, be wealthy, healthy, and you will focus on one thing, yourself, your constant progress and improvement, and you will keep on striving towards achieving your goals. And no matter what, you will never give up because determination and passion about what you are doing is what helps you to get to that top level. And yeah, from my side, I will be trying to get more and to do more trade recaps, case studies, and some uh, basic trading posts on my Instagram, especially. And the same goes with YouTube. Um, but yeah, we'll see how it goes. So in this video, I will be showcasing the trade and its analysis that I have taken on the 3rd or 4th of July, January, and and some longs afterwards that I have missed, unfortunately. Uh, but yeah, I have, of course, as you can see, these longs running right now, and I will do a video on it next time. So yeah, that will be coming out soon. I have taken heavy partials um, at this high, and as you can see, it has kind of retraced. But yeah, well, we will see the outcome of this trade in the next video. And until now, we will be looking at this part of the price action where I have taken the shorts. Okay, so let's get into the video. But before we get into the video, I have forgotten to say that um, if you think that you have kind of watched this video and you haven't really gained value, that's fine. Or you haven't really, learned something new, that's totally fine because um, what I have noticed is that I actually don't really use much concepts. So if you were to ask me what concepts do I use, I actually use only 4 of them, and the fourth one is like one word: execute. Okay, so I will break them down, all the concepts or all the steps that I'm watching before getting into the trade. But yeah, this is why I'm not doing many videos, because I think like every single trade recap is basically showcasing the same thing over and over again with different trades that have played out. So that's the part that I am apologizing for, and that's the part that showcases how trading actually works, because you don't really need to do the same I mean, not the same, but the new stuff every single day in order to be like successful in this trading thing, right? You need to be getting better and improving your skill, and then practicing, and then whenever you are feeling yourself like you're ready, just keep on doing the same thing all over again, and it will finally work. So yeah, with that said, let's get to the video. And as you can see, I'm on a 4-hour time frame, and starting from like, I don't know, 30, I mean, whole December we were ranging, as you can see, and um, we had this expansion to the downside, retracement, expansion to the downside, and then if I was to look at the structure, we had this last break of structure to the downside, but then we have turned short-term bullish, right? For one simple reason: to sweep those liquidity pool, and so is this high, and then to mitigate this extremely refined supply. And then after we have swept the liquidity and mitigated the supply, we have somewhat correctively broken the structure in here. So this is our new swing high, and this is our new swing low, okay? And everything that has happened after that is pretty much nothing. So it is a range that you either stay out of or you trade the edges, which is here and up here, okay? Or like you sell high and buy low, okay? So we have this break of structure, and what I will start with is that many of you have asked me, how do I classify this and that, like break of structure and swivel liquidity, right? So a lot of you guys are struggling with this question because whenever you're looking, for example, on 4 hours, right, you will see that uh, in this example, we have this swing low and we have kind of wicked it, right? So if I was to take this away, oh my God, okay, whatever. If I was to take that away, we will see that this wick has actually come a bit lower than this high. But on 15 minutes, for example, those were the candles, right? And on 15 minutes, it is a break of structure, but on 4 hours, it is only a sweep of liquidity. Why? Because this is a weak price, didn't really close below the low just yet. And look how aggressively we have pushed to the upside back, right? So this is what I classify as sweep of liquidity. Whenever we, let's say, sweep the low or sweep the high, and then aggressively move towards the opposite side, okay? We have also a great example, but a bit different in here. So we had this high, but then on January the 1st or 31st December, we have actually broken and closed above this swing high. But I mean, as you can see, I have written it here. We have a boss and break of structure and a sweep of ERL, which means external range liquidity. And why do I classify this as both? Well, because just for now, I make an anticipation that we have retracement or shorts incoming, but we have also swept the liquidity resting above this high, which has external range liquidity, right? And look how then price has pushed to the downside with impulsive candles, okay? So I hope that was clean for you. So I will repeat that once again. Sweep of liquidity is when we wick or don't close above or below the high or the low, right? And we aggressively move away from the sweep, okay? And the break of structure is when we close above or below the high or the low, okay? So yeah, the whole theory about these sweeps of liquidity is that you need to trade away from them, okay? So that's why whenever we were stuck in the range, right, like let's say we have swept this external range liquidity and you see that the price hasn't really closed above, below in this case on 4 hour, then you need to trade, away from it, which means that you need to buy, okay? Whenever we have swept this with this wick, these highs, right, and we see that with this wick we have actually showed some aggression, trade away from it, sells, all right? Overall we have, demand chain holding, something like that, and we will see what will happen in the next days and weeks. But just for now, we are kind of back bearish again, because we have, this over high that is our strong high just for now, because we have broken this low that has broken this high. So it's this high. So from the present standpoint, I'm waiting for price to get to the supply that has broken this demand, and then we'll see whether it is going to be shorts or a follow through to the upside. Okay, so yeah, now more about trades that I have taken, especially the one short. Okay, so we have our strong high. We have broken this low, that's why this is a strong high. This low has failed to take out this high, so this low is now weak. But then this high, so is this high, they struggle and they fail to take out this low, which means that both lows and highs are weak, so anything can happen in the range. Okay, but whenever we have broken this point of structure, as I have said, the anticipation is that we will see a retracement soon, which means that the shorts, which means that we now go on 15 minutes and we want to see a change of character, or a so-called a shift in momentum. And as you can see, we can see that in here. Okay, so just to make it better looking for you, I will go in 5 minutes and you will see that this high has swept this high. Okay, and then we need to see where we have swept the low, and this has happened not here but here. Okay, so this was the low that has swept this high. So we now can see that we have a change of character and then a further supply getting respected. Supply, as you can see, we didn't really break the supply. We have respected up to here, and then we have this demand just for now holding, as you can see, and it gives us reaction. Demand, it gives us reaction, but then this supply takes out the reaction point, and then as you can see, the price perfectly comes back to the supply and goes to the downside even more. And at this point I was sure that we will see somewhat continuation to the downside, and that's why where we are. So yeah, and that's why I have waited, because I don't really trade much when it's holidays. And we then see this demand. I believe this is a 4-minute demand right there, and we see the reaction. Where is my brush? Here. Yeah. So we see a reaction to the demand, but then we see that this 1 minute, if I'm not wrong, supply takes it out, and then as you can see, we break multiple points of structure, but then we once again turn bullish because we have shown a change of character to the upside, and that's fine. That will happen, times and times, because nothing can only rise up, nothing can go down only, right? Which is why we see some demands getting respected. And what is the idea and what is the reason why demand gets respected? Well, it gets respected to accumulate the liquidity on the opposite side, and then whenever the price will get back and do what it wants and what it needs to do, right, which is in this case go down, it will then use this side of liquidity, which is sell side liquidity, into its favor, and then go down, because liquidity is our fuel. Okay, so that's why I have marked out the supply that has flipped the demand. Uh, all these highs are inducement or liquidity that is resting below the supply. And then once we hit the supply, we have actually swept the liquidity. And now what we have shown, well, we have change of character with these lines, okay? Which means, first of all, we see an aggression and we see that there are some sell orders that needs to get filled and that were filled. And that's why we see that, in this case, of course, we can see that sellers overpowered the buyers and supply is now stronger than demand, which means that shorts are something that we want to be taken and we want to be a part of. Okay, so in this case, we can see then once again, price creates inducement with those highs, comes back to the supply, mitigates, and then pushes away. Okay, and in this case, we have, of course, as I have said, we have this demand chain holding. Okay, but as you know, this low hasn't taken this high, or most importantly, this swing high, which means that this low is at the end of the day weak and will get run. But we still need to pay attention to the reaction that demand this wick will give us, right? Which is why at this point I went on 1 minute time frame, and let me actually replay it to, this one is going to be fine. So that's why I went to 1 minute time frame, and if I was even to go down into seconds, right, which I don't really need in this case, we can see that this wicks, buy to sell wicks, this is a reaction to the demand, and we see how, we'll actually go in 15 seconds in here, so you will see that better. You see how perfectly it comes up to the area that has actually flipped the demand. Okay, so we see an aggressive push to the downside, but then this candle shows us reaction to the demand, and then the next 4 candles take out this demand. What price does is actually creates inducement. Once again, this is liquidity to take, and then mitigates this supply, and then reacts aggressively and pushes to the downside even more. Okay, this once again shows that buyers are weak and sellers are strong, which is why we want to sell. Okay, and at this point I was of course sitting on 5 seconds or 15 seconds, no matter, doesn't matter. And we have seen a continuation to the downside. We have this impulsive break of structure. We have this inducement. Once again, as you can see, we have this range that gets mitigated clearly with that wick. We then see that we have this reaction. Where is my brush? We have this reaction, right? It did react to something to the left. Well, will it hold? Yes. Look, this candle held, okay? Which means that we now have this as our demand. But of course, whenever you get on 5 seconds, you will see that there is also an unmitigated 5 seconds time frame, and this is an inducement. So we once again come to this demand, we show the reaction, but then we have flipped it. We have taken the reaction point out, which means that supply still overpowers the demand. So at this point, I was on 5 seconds waiting for price to show me another flip, and it did. Where's my brush? So we have created sell-side liquidity within this area by reacting to the demand. We have then broken the structure, and then we have this inducement. We have swept the liquidity with that wick, and then I just sold. Okay, that was manually executed, because in time frames like 5 seconds, there is no time to get the limit orders set. And as I have showcased on my Instagram, this is our next entry that was possible, this one, because we have shown the reaction once again. To the downside it goes, and then retraces back to the origin of the break of the supply demand, and then it goes to the downside. Okay, so I hope that is clear for you, because like if you see this overextended lag, you shouldn't be scared, to take these continuation buys or sells, and more so you don't need to be scared or aware that the price will aggressively reverse, like from this area up to here. It will sweep these highs because this is liquidity, this is double bottom and double top, sorry, and will mitigate, let's say, this supply, and then it will go to the downside. It doesn't need to do that, okay, because we have let's say accumulated enough liquidity or enough orders to fill above these highs, and as you can see, we have actually like swept this high. Okay, so we have enough liquidity to move the price to the downside, which means that we just need to find the most recent interaction zone between buyers and sellers, which is flip, right? And then we execute from that. And yeah, I think I have explained pretty much everything about the shorts. They have, as you can see, played out, but I have an alert set at this refined demand on 1 minute. So we have this 15 minutes order block that has actually, created or have done, I don't know, change of character, and that has come from mitigation from the zone to the left, right? And then I was willing to take it, but I just missed, which is part of the game. And this one was pretty clear too. So let me zoom out. So yeah, as you can see, we have now come to the zone, the refined one, and what do we need? We need a mitigation, done. We need a liquidation, done. Let me actually mark it up. Here is our liquidation, choke down. This is our choke to the upside. And then what do we need? We need a flip. Well, a flip has actually happened here, because you can see here an interaction between buyers and sellers. But for more conservative traders, the flip is actually like the second flip, right? Is the reaction to this supply in here. Okay, in here. There's our reaction. But does it mean that we take it from this? No. Why? Because we haven't really, well, this is the demand that has broken the supply, right? But did it take the liquidity out? No, which means that we'll most likely use this as inducement and create another entry opportunity at the extreme, which we hopefully will see soon. Yeah. See, so this is our, I will not mark this out, but you can see that this is our range. This is our range. Okay, so we just take, we can put a limit order if you have time, but if you have not, then you just simply manually execute it. Here, 1 pip stop loss is what I use, and you can target anything you want, but I would target, let's go in 1 minute just to see where we are. Well, I would target this high because liquidity lies there. So let's see if I'm right in this situation. Okay. So we get tagged in, and then price shows a great reaction. But then I think this is Asia now, Asian session, right? Maybe not. Maybe not. I don't know. But whatever. So at this point, I would have been like highs at 20 RR, which means that I will definitely take some partials. But then let's see if the price actually goes that high or not. Yeah, pretty much perfectly goes to our target, which means that we have target at 28.8. Oops. I have done something wrong. So we, oh my God. Yeah, we have our take profit hit, as you can see. And this is a 28.8 trade. And then as you can see, it has perfectly tapped us out and then retraced back. Okay, so this is also an important thing that you need to consider becoming better at is putting your targets. Okay, so just before you enter the trade, you need to understand that your exit point is so much more important than your entry, because I know and I have witnessed that a lot, that more of you guys are so focused on getting a perfect entry or a so-called sniper entry, right? Well, this is not that you need to be targeting or paying attention to, because, well, a great entry is good, but if you don't really know where to exit, right, then you will probably lose more trades than you will if you know where to exit. Because exit is not only take profits, there's also stop losses, right? You can have a bigger stop loss, let's say not 1 pip, but 2 pips or 3 pips or even 4 pips if you're comfortable with that, right? But if you don't really put your take profit correctly or your stop loss correctly, then the entry point will not save you. Okay, but if you know the grade and you know that there is logic behind, and you have a perfect or a right idea behind the trade that is aligned with higher time frame direction, right, and structure, and with liquidity concepts combined and all that, then you don't need to do perfect entries if you are good at getting targets. Okay, I hope that makes sense, because now I'm kind of waffling a lot and I don't really know what I'm saying. But yeah, that's the nature of myself. So yeah, I think we will end it there. This time, this is not a 50-minute video. This is only a 30-minute video, and I'm really sorry that I have kind of talked much at the end. And once again, I hope you will like this video. If you haven't, then tell me why. If you have liked it, of course, I will appreciate every single comment. And yeah, ask me questions in my DMs on Instagram. And I will remind that starting from this week, I will be providing calls, like, I don't know, personal calls or something like that. So if you're interested in that and you think that I can help you, only if I can help you, right? Like, I'm not saying that you need to spend money on me, right? Just if you think that I can help you, then DM me on my Instagram and we will sort the date out, and yeah. So yeah, I hope you will have a great day, a great trading week, month, and in New Year 2022 you will have more profits than losses, and you will finally achieve that consistency that you are trying to achieve.